Alright, today we are going to review a strategy that works fantastically well and that can be used by anyone. It's made me, thousands of pips in the past, and basically what we're going to be doing is trading breakouts of trend lines. Alright, there is a special way of trading trend line breakouts in order to capitalize as the established trend collapses. Once a trend gives way, usually we see a momentum in the opposite direction as, again, the trend collapses. Well, that's the move we're going to be profiting from here. Okay? Alright, let's get going. Alright, well, let's begin with the definition of the type of a strategy we are going to be reviewing today. As you know, whenever price is actually trending, what we usually see is a different number of swings where price pulls out momentum thrusts in the direction of the trend, then followed by a little bit of a pullback, then another momentum thrust, another pullback, and so on and so forth, right? Price keeps on making higher swing highs and higher swing lows as it moves in the direction of the trend. Well, what we are going to be doing here is not to actually try to search for trading opportunities in the direction of the trend, but rather we are going to be waiting for the trend to run out of steam, to run out of gas, which eventually, it always happens, every trend comes to an end, and we're going to be ready in order to capitalize on the momentum collapse that we usually see once the trend actually gives way. Again, there is a there is a saying in the in the Forex lingo that price crawls in the direction of the trend, but it rushes out of the trend. And that's actually true, all right? Whenever price is actually moving in the direction of the overall trend, well, people are rather cautious. Traders build up on their positions rather slowly. However, whenever the trend shows its early signal of exhaustion, people simply rush out of the trade before the collapse finally takes place. And when people rush out of a trend, what they basically do is they simply close all their positions, all right? All the people who've been going along, who've been buying into this uptrend, they simply, as soon as they see those early signals of weakness, they close out all their positions and price simply plummets, right? That's the move we are going to be capitalizing from here, okay? That momentum thrust as the trend comes to an end. Again, every trend comes to an end, and we got to be ready to make money once that massive price drop finally takes place. Alright, well, the first element that we need to establish as far as trading trend line breakouts is obviously the outer trend line, and I actually mean the last trend line to find on any particular trade. As you probably know, as price swings within a trend, well, we are able to draw different trend lines, okay? Some of them are inner trend lines, some others are outer trend lines, another inline trend line in there, etc., etc., right? Well, we are only interested in the very outer trend line, okay? The last line of defense. So once price actually breaches through that trend line, there is no further trend line to work as support anywhere below. The reason for that is so once the breakout takes place, the consequent move actually happens in momentum, okay? As market accelerates to the downside, there is no further trend line below to stop price as it falls down in momentum, okay? So we need to establish only the very last or the very outer trend line on that trend. Okay, so once we've actually established that outer trend line, we need to wait simply for the breakout, right? If that's our outer trend line, and well, price has been zigzagging up, now finally comes back to retest that trend line once again, but eventually it runs out of steam. Well, this trend has been going on for too long, and eventually price breaches through that trend line. Again, that's just a matter of time. Every trend comes to an end sooner or later, and that's exactly the moment where we are going to be trying to capitalize from that moment, right? However, we are not going to trade that initial breakout. Instead, we are going to wait for the first swing pullback. The reason for that is because if you try to trade the initial breakout as price begins to tick below that trend line, you will be prone to fake signals, to fake breakouts. Price initially seems like it's about to break through, but immediately after it pushes back up and goes all the way up to well, above the trend line once again, okay, and therefore, well, the trend continues on its merry way. In order to avoid that initial breakout, what you want to do again is to wait for the first swing pullback. Okay, here is how it works. If that's our outer trend line and price eventually breaks through, we've already determined that we don't want to try the initial breakout. What we do, simply let price take off on its merry way as it plummets after the breakout, and then simply wait for the first swing pullback. There are two spots, two levels where price usually retraces to, which is either to retest the breakout point or the trend line from below. Somewhere in there, all right? What you need to do is to simply be prepared to wait for pullbacks either again to the breakout point or to retest the trend line from below. It's the concept of, well, former level of support, okay, holding all the swing lows. Well, once broken, it works as resistance. I am pretty sure you are familiar with that trading concept. Well, that's exactly what's going to happen here. Price breaks through, a little bit of a pullback to retest former support, now levels working as resistance, okay, and from there, as it turns around, that's where we are going to be searching for our entry. The idea here is to search for our entry as tightly as possible around the bounce point, around that bounce point, once the pullback dies out, okay, once the pullback begins to in fact turn around in the direction of the original breakout. Please mind that the actual move we want to profit from is the consequent collapse, okay, is the next move, which is the one that usually happens in momentum. That's the move you want to profit from. Again, we are not going to try to profit from the first breakout move. Instead, we are going to wait for the pullback, and this is where most of the trading volume, this is where the largest move, the largest breakout move actually happens. And moreover, quite frankly, this bounce here up on the pullback is just more conservative, well, safer to trade, and it usually yields a higher win-loss ratio than simply trading the first breakout, okay? So this is where I usually specialize on this second move, and this is where most of the money is to be made up on the trendline breakout. Now, obviously, the main question remains, how can I find a tight entry around bounce point, right? Up on the breakout and the pullback, how can I define my entry, okay? How can I squeeze my entry as tight as possible to that bounce point so I can actually ride most of the down move from that initial bounce, right? Well, here's the technique that I personally use in order to nail down my entry as efficiently as possible. Okay, first of all, we need to define our potential retracement levels, okay, up on the breakout. Once price begins to pull up, we need to define the potential levels where price may stop to on its as it retraces back. All right, again, that's a breakout point or the trend line from below. This area around there, that's where you want to search for the specific pattern I'm going to be showing you in 1 second. You can also use the Fibonacci retracement levels from the very beginning of that, the beginning of the breakout swing. You measure your Fibonacci levels, right? Your Fibonacci retracement levels to the end of the breakout swing, and then you would get the 38, the 50, and the 61% Fibonacci area, Fibonacci retracements around there. Well, that's the area where you want to search for the following price pattern. We are going to trigger our entry of a 1, 2, 3 reversal pattern on the shorter time frames. A 1, 2, 3 formation basically is whenever price actually pulls some sort of an leaning M formation, okay? Assuming price has been moving up, all right, eventually pulls a last swing high, a last swing low, and then a lower swing high, and eventually price breaches through the low of that, well, aspect number 2 of the 1, 2, 3 formation, okay? This is a bearish reversal formation. It means, or usually indicates, that price is about to turn around from an uptrend to, well, a downtrend or a down move, a counter move, okay? Conversely, a bullish 1, 2, 3 formation is